Hi there. Thanks for tuning in. Today we're going to be doing an analysis and valuation of LVMH, Louis Vuitton Moet Hennessy. So let's just get started. And what they are is a luxury goods company. They sell all around the world, right? They sell products such as Louis Vuitton, Moet, Hennessy, but they have a bunch of other brands. They have wines, they have spirits, they have watches, they have many of those luxury categories, which we'll look at in a minute. And they are basically a very geographically diverse company at this point. Even though they're a French company, they operate in Asia, in Japan, in Europe, in the United States, and in other markets. So yeah, they're pretty huge. And in the 9 months of 2023, the revenue was 62.2 billion euros. So that's really interesting. They have organic growth pretty much in most places in the double digits and a little lower in the United States due to supply chain issues mainly and overstocking of inventories. But this is pretty great, right? We are seeing that this company is growing at double digits and has done so consistently over the last couple of quarters. A little bit of volatility, but that's to be expected. And we see this growth materialize in almost every single sector, right? They're in fashion and leather goods, perfumes and cosmetics, watches and jewelry, selective retailing. Wines and spirits is the only thing that has lagged behind significantly. And they seem to be making more acquisitions nowadays to sort of make sure that that growth comes back, right? So if we see the consolidated income statement, this is actually from the first half of 2023, right? So basically reporting from January 1st to June 30th of 2023. This is December 31st, 2022, basically reporting for the whole year, and then the first half of 2022 for comparison's sake. So you see, for example, a revenue of 42 million euros all the way from June, which is a growth all the way from the last half in June 30th, 2022. You see gross margin that's massive, actually. It's crazy how it's like almost 70% roughly of a gross margin. So they're not losing much by making these products, right? Which for fashion is actually incredibly impressive. And after you discount marketing and selling expenses, which is pretty much most of their expenses, you have the profit from recurring operations, basically operating profits. The margins are also very, very, very impressive, right? Over 25%. That is quite impressive. And again, for the sector, it's pretty insane, right? And then you go down discounting some things such as, for example, taxes or other things, and you have the net income, once again, pretty high. So margins are great. We love to see that in a company. We love to see it in a company as diverse as this one, right? Where all these growth rates are materializing, but they're even better because they reflect in the bottom line because of all the high margins. Part of this is because they basically control their whole supply chain, right? So they're a little less vulnerable to these vulnerabilities here. They can basically really fine tune how much it costs to make each little piece of everything. So they seem to have done a great job at that. Good job, LVMH. Now, I'm going to just jump straight into a model, right? Basically take these numbers from the previous years, right? For example, these 79 billion euros that were earned in December 31st, 2022, right? For the full year 2022, we're going to predict for 2023. What I'm going to do is I'm going to go to Yahoo Finance. I'm going to go to analysis, right? And here you can see a revenue estimate, right? For LVMH, you see how many analysts have predicted it. So we have 30 analysts. So this is a very followed company. And here I'm going to take the average estimate, right, for what revenue will be like in 2023 and 2024. So in 2023, it will be 85.9 billion euros. And in 2024, it'll be 91.01 billion euros. Okay. Now, what I'm going to do is I'm going to grab the average free cash flow margin, which is basically how much of revenue has been turned to free cash flow, which is about 17%, right? And I'm just going to apply it to these numbers. That'll be my free cash flow every single year, right? So now I have a discounted cash flow model. Essentially, here for the 2023 estimate and the 2024 estimate, this is essentially these two numbers converted, multiplied by 0.17, so 17% of that. And then I'm going to grow LVMH at a 3% rate for perpetuity, right? This is pretty conservative given how much they've grown lately, but I'm just doing it for demonstration purposes, right? I'm going to have a required rate of return of 11%. Essentially, that's 1% more per year than the market gives me. If it gives me on average 10%, well, 11% is going to compound to be a lot in the long term, right? And I'm a long-term investor. And with a perpetual growth rate of 3% divided by the total number of shares out, we get a fair value of equity of 375.22 euros per share. If we subtract the net debt from that, which they do have quite a bit, and quite a bit because of all these acquisitions that they've been making, we have a fair value of 319.2 euros per share, right? Now, Louis Vuitton Moet Hennessy is insanely overpriced if we compare it to this number of 319.2, right? So we have basically double that. So what's going on here? Well, we see the stratospheric growth it's really had, right? We haven't really seen these numbers since maybe 2020 or early 2021. So it's grown a lot. It's been so consistently growing that I think investors have recognized how worthwhile LVMH is as an investment, and the share price has reflected it. And even though it's down from highs of like almost 900 euros, right now, compared to this model, it doesn't look worth it, right? But let's provide another perspective. This is saying basically it's going to have a 8% growth for 2023 and 2024, and then 3% growth from 2025 onwards, basically. This is not what they've done lately. They've done much more in terms of revenue growth and to some extent free cash flow growth, right? So if I instead say that their free cash flow is going to grow by 7% in perpetuity, right? Still the same numbers for 23 and 24. After that, it's just basically 7% in perpetuity. Then my total fair value would be roughly after debt 619.61 euros, or before debt 675.63 euros. So it's a little closer, but you have to see the difference here. Here, I'm saying they're going to grow 3% in perpetuity, right? Which is quite literally way more likely than 7% in perpetuity, right? That is at least 4% more, and over time, that adds up to be a lot, right? It's a lot easier to grow 10% when you have $1,000 in sales, right? And you just want to make that 1,100, than when you have $1 trillion in sales, right? Growing that 10% is very complicated. So as LVMH grows, it's natural that growth is going to drop off a little bit. The question is, how long can they sustain the current double-digit growth rates they have, really? And what acquisitions can they make? How much more control over the supply chain can they have to fine-tune those margins and to acquire new companies that will further that double-digit growth, right? But basically, for these assumptions to be true with the current price levels, you need a 7% growth rate, basically. So that's just very important to note. Now, I also want to do another comparison, which is using PE, right? So compared to other brands or businesses in a very similar sector, right? In the general luxury fashion sector. So LVMH is by far the biggest, right? The market cap is basically at least twice as big as comparable companies. However, you'll see that the PE is actually pretty much in line with the industry median, if not a little lower, right? You only see a few companies here like Christian Dior, Hugo Boss, and Swatch that are a little lower than LVMH. So even then, this seems to be a sector that always gets valued at a premium, right? Or priced at a premium, not really valued. And that's also important to note, because if you're going to be an investor in LVMH, well, you probably will have to conform yourself with buying it at a premium, and you have to be comfortable with that, right? And it's important to just compare with the sector to see how much of a premium you're paying relative to everything else. So overall, in order for LVMH to be valued at the levels it currently operates at, it would need a growth rate of about 7% in perpetuity. Now, this isn't impossible, but what is the story that leads LVMH to have such growth for so long, right? What's the story there? Are they making the acquisitions that they need to make? Are they fine-tuning the margins that they need to do, right? And how is LVMH affected in an economic downturn? Do certain demographic trends disproportionately affect it, right? So how many people will stop buying LVMH products if there is a recession? And for example, most of their sales are in China, right? Or in the Asian markets. If population declines there or the economic growth there isn't as stellar as it's been lately, what happens then to their bottom line? So that's just something to ask yourself and to see what kind of story fits with the future growth of LVMH that you're forecasting. But even though it may be overvalued, at least according to my first calculation, it's an amazing business. The operating margins are amazing for a business in this industry, right? Every single margin at every level is amazing, and it's very consistently been that. On a PE basis, this company is actually fairly aligned with the sector and more fairly valued than most competitors, but that's why it's important to have some absolute valuation, such as a discounted cash flow, to compare with a relative valuation such as PE. And the growth is pretty incredible, and the acquisitions have only made it bigger and have made it grow further. And the share buybacks and a small dividend contribute to overall returns. So that's pretty nice to have that, even though it's not a ton. So overall, what I'll say here is that the core of value investing is investing in great businesses, right? We have to find something that you wouldn't mind being an owner of because it's already such a great business, right? After that, the price that you're willing to pay for it is different, right? So price is what you pay, value is what you get. So it's important to see what you're willing to pay, right? If you're willing to pay a premium for a great business, maybe that stock won't make you absolutely rich, but it will keep you wealthy, right? It will make you wealthier. It just won't change your life absolutely, right? So this may be something that'll be the case with LVMH unless the stock price goes down significantly, but that doesn't mean that it doesn't have a place in your portfolio if you deem that it fits, right? So I think that's something important for you to analyze and for anyone to analyze when they're doing a deeper dive into this company. Now, thank you so much for watching this video. I really appreciate you watching it till the end. If you like this content, don't forget to like and subscribe. And if you have any recommendations for any stocks I should look at, please comment down below. I would love to take a look at them. With that said, thank you so much for your time and have a great rest of your day.